Bismillahirrahmanirrahim. What is up, guys? My name is Hassan, and welcome back, everyone. Hashtag good investing. When we talk about good investing, we're talking about building wealth in a very specific manner. Before we get started, you guys can see that this is my M1 Finance portfolio. It's currently at $11,400. So I want to give you guys a quick investing tip, and that way we set our mindset in the right direction. So this is a quote by Dave Ramsey. Building wealth is a marathon, it's not a sprint, and discipline is the key. Here, he's pretty much comparing two different types of investing. One of them is a marathon, which is a long term, you run for miles and miles and you meet your end goal one day, versus the other one, which is a sprint. You run as fast as you can. Either you win the race or you don't. But however, for a marathon, you're always the winner because you finish the race, and at the end of a race, they give you a medal. So investing is pretty much a simple method where we accumulate wealth over time and without being emotional. That when we're investing for the long term, not for 1, 2, 3 years. We're investing for 4, 5, 6. We want to look for companies that are not one bagger, they're 10 baggers, 12 baggers, 30 baggers. We want to take a stock that is $10. We want that stock by the time we sell it to be around $300, $400, $500. So I'm going to take you guys to my M1 Finance portfolio, and we can see here we're up around $150 right here. And if we look at it for the 1 week, we're up almost $212. And if we look at it for 1 month, we're up $863. If we look at it for the 3 months, we're up around $1,100. If we look at it for the last 1 year, we're up around $1,700. And if we look at our all-time chart, we're up almost $2,000. Here, this $1,900 or $2,000 is divided into two sections. One of them is earned dividend. This is the money we didn't have to work for. This $500 was given to us of passive income. Pretty much that this is passive income is the opposite of active income. Active income is when I work, I get paid, but passive income is even if I don't work, even if I'm sleeping, relaxing, doing the things I enjoy, I'm still getting monthly dividend month after month. And then we have a capital appreciation of almost $1,500. So this gives us almost $2,000 in income that my cash produced. So today I'm going to give you guys an update on my M1 Finance portfolio and the companies I'm invested in. In addition, give you guys an update on my monthly tracking sheet, the monthly income that I'm getting month after month. And in addition, show you guys the dividends I received in dividend payments for the last 2 months. As always, don't forget to check out the disclaimer in the description below. And that way, we're not just following somebody blindly off of YouTube or on the internet. We have to hold ourselves accountable for every single move that we do. And another thing, that as a Muslim investor, I am not a scholar. I'm not here to qualify if certain stocks are halal or haram, meaning permissible or impermissible. Now I want to show you guys the S&P 500. We're going to take you guys straight there. A quick look on how the market has been doing. So we can see here for 1 day it's pretty much up, 5 days, 1 month, and then if we look at it for 6 months, and if we look at it for 1 year, for the most part, even if we look at it for the last 1 year, the S&P 500 has been up around almost 16%. Another thing I want to point out is a lot of people I've been talking to, I asked them if they're investing or are they holding on to it. No, a lot of people said that they're waiting for the election to pass by because they feel like after the election, it might dip if Joe Biden wins or not. And for me, I told people like, it really doesn't matter because all the things are being taken care of, and I'm going to continue to invest. And around November 2nd or 3rd, the market just kept going up and up and up. So we were actually from November 2nd to say around current date, we're up almost 10%. So if you're waiting for the market to dip, it never happened. So it's really important that we look at this. We look at investing as a marathon where we're continuing to month after month investing money into the stock market or growing our portfolio. Now I want to show you guys. So this S&P 500, yes, it tells us how the market is doing, but it doesn't really tell us how the economy is doing. The way I look, yes, this tells us the market, but now I want to look at the economy. And how do I look at the economy? Is I look at the United States health bar. And how do I tell that? By looking at the unemployment rate. So this is the United States unemployment rate. We can see the month after month. And this is what I call the health bar here. If the unemployment rate is good, the economy is doing well, people have jobs, people are living their life. So here we can see that month after month from April, May, June, July, August, September, October, it has been constantly decreasing month after month. So if the unemployment continues to decrease, our stock market is going to continue to do higher and higher. So just keep this in mind as a health bar, how the economy is doing. If the unemployment continues to decrease, we should see more highs and highs in the market. So one thing that I want to point out is that our end goal of the unemployment is to go back to 3.5, 3.6, because this was pre-COVID. We can see for the month of October here, analysts projected to be around 7.7% in the unemployment rate. However, the actual is 6.9. So we actually did better than what the analysts were expected. So pretty much the analysts were way wrong because the unemployment was a lot less than what they expected it to be. So whenever analysts is upset, that's where we smart investors come in, because this gives us a good opportunity to invest and buy more even when they are upset. So when an analyst downgrades a stock, we go in and we go buy it. Analysts upgrades it, we go in and we sell it, because a lot of times analysts has no idea what they're doing. They give out estimates because that's part of their job, and sometimes they're just trying to sell a story. So my point is, whenever analysts are upset, we take advantage of that because we're long-term marathon runners. So this is my monthly dividend income chart. This is how I track how much money I'm getting each month. So guys, if you guys made it this far, make sure you guys subscribe and hit the like button. It really helps promote the channel. I can reach out to more people, because at the end of the day, and when we are investing, we're actually on the same team. We're not against each other. So our job is to help each other win, have the best investing strategy. Here I'm promoting pretty much a dividend growth investing. M1 Finance monthly income. We can see if I just move this a little bit from the month from 2009 in January, I started off with $0 in dividend income. And now we're at almost $20, $30 of dividend income each month. So here we can see, we took a look at the last few months. April, I was at $25. May, I was around $20. June, I was at $33. And then July, I was at $14. So if you guys have been checking out the news, a lot of companies are bringing back their dividends. So that is a great news, and we should see this linear projection go higher even at a faster rate. For the month of August, I received $19.52. And we can see here it's automatically started plotting it. And for the month of September, I received $37.96. So $37.96. And then we can see for the month of October, we received around $14.55. So here it's going a little bit cyclical. It's going up and down, but the long-term projection is, if we look at the trend line here, it is still up. As the months continue to go, I should receive more dividend income month after month. So if you haven't created one of these charts, I highly recommend creating one of these, because this is pretty much like a bookkeeping, or this is your accountant. It shows you how much money it's coming in. And then if we take the look at the total, we're just going to quickly change it. So it says here B15. So we're going to change it to B20. And it should give us around $405. And we're going to increase our average. Is at B17. We're going to put it to B20. And the average is around $25. And one of the reasons why I like this chart is because it is very predictable, and I know how much money I'm expected to get month after month. Just right now, I see that on a monthly basis, I should see around $25 in dividend income just from this portfolio, just from this one of my M1 Finance portfolio. I look at this as like another side income. Every month I'm getting paid, and with this money, I can spend it on my grocery or pay my internet bill. What I like to do is reinvest it for eventually, once it becomes a significant amount, such as $400, $500, $600, I can start supplementing my income or start paying some of my bills. And if you guys haven't started yet, make sure you guys start the dividend process. And in the beginning, tick mark doesn't really move, but after a while, it starts getting bigger and bigger, and you'll start seeing more income come in. Like for example, in April, I was only making $7.97. And then a year later, in the month of April, I was making around $25. So it's a big jump, and it'll continue to grow year after year. Now I'm going to take you guys to my M1 Finance portfolio, and I'm going to show you guys some of my sectors that I'm invested in. Guys, if you guys made it this far, make sure again support the channel by hitting the like button. It doesn't harm you. It's just a quick click. It helps me grow. So here I'm going to show you guys, we have technology. I'm up around 68%. And we're just going to go with the face value. What are they saying here? Consumer cyclical, 86%. Industrials, energy, healthcare, basic materials, and communication services. So we're going to quickly show you guys some of the holdings that I have. So in technology, I'm up around $1,300 total, or 67% according to M1 Finance. And these are some of the holdings that I have in my technology. So I have NVIDIA, Broadcom, Cisco, Skyworks Solutions, Garmin, Texas Instrument, Microsoft, American Software, National Instrument, and then I have another chip making company. So if you look at it here, pretty much all of my companies are up massively. We can see 94%, 100%, 24, 76, 71%, 100%. So if you guys are investing long enough, you'll start seeing these crazy gains over time. It's just not going to happen within a 2 weeks or 2 months. It takes a couple of years, and you guys will start seeing, oh, I'm up 40%, 80%, 100%. And it'll continue to grow as long as you continue to invest and let the money run. These are solid companies. Make sure you guys take a look. So we're going to take you guys to consumer cyclical. If we scroll down here, PKG, a packaging company, Tapestry, Contour Brands, we have Gentex, VFC, Expedia, Escalate, Marine Product. These are all solid companies. Make sure you guys do your own due diligence. Make sure you guys look into it. But these are companies that are going to do really well in the long run, and they have paid off so far. So if we look at it, we see 57%, 100%, 80%, 50, 57, 64, 100, over 100, 160%, 70, 200, 96%. Now I'm going to take you guys back to my next sector. I'm going to show you guys my industrials. I have around $1,800, which we can see right here. And the companies that I have, I'm going to scroll down. We have 3M, Honeywell, Emerson, Waste Management, and AOS. So these are, again, solid companies. And in my industrial, we're not up as massive as the other companies, but we're still doing fairly well, around 46%, 10%, 50%, 30%, 22%. And we're going to show you guys one more sector, and then I'm going to show you guys my dividends that I received for the last 2 months. And then we can see my energy here. Energy, they pay a lot of dividends, but I only have 2 oil companies, or these are actually pipeline companies. Even though they don't produce the oil, they actually transport the oil. Instead of looking for gold, why not just sell the shovel for all the people who's looking for it? So in that way, it reduces our risk. And these are 2 great companies. Check them out. Yes, they do pay a little bit high in debt, and that's my major problem with these 2 oil pipeline companies. They have high debt, but in the long run, they're solid companies. I'm not sure if I'm going to sell them or not, but eventually I prefer companies with lower debt. And even when I say lower, it's actually a lot less than the majority of the companies out there. So now I'm going to show you guys my dividends. We can see that PetMed paid me on November 20th, 8 cents, another $2.54, $1 here, and then 47 cents. And then we have $3, $10, WD-40, another 14 cents, $3, $1, $3, $2, 42 cents. Even though here, like literally it's not a lot, but look at this. If we look at it, October 14th, October 15th, October 21st, October 30th, November 13th, November 13th, November 13th. Every few days, we're literally getting paid, or income that is coming in that is being direct deposit into my investing account. Time and time, dividend investing has been proven to work over and over again. So before we end the video, I'm going to quickly take a quick question. So this question is by Jesse. He's pretty much saying, he's asking us for our thoughts. Since pandemic, my portfolio has been pretty much stagnant minus the loss. I've learned about yield chasing, and those 6% dividend stocks have been cut, and I'm still underwater by 15% in total portfolio. Dividend income, so he's pretty much saying that his dividend income got cut by 33% roughly, thinking of just selling everything and going directly into growth stocks for a couple of years and then come back to dividend investing again. Appreciate the feedback or our thoughts. So pretty much here, as I pointed out in the beginning of the video, that the market has been pretty much up or has been doing really well. So if your portfolio is stagnant or even the negative, that's a problem. So I think that you're invested in a lot of not well-known companies, as long as, especially companies with 6% dividend. So I think that the general rule is that anything over 5% is red flags. So you shouldn't invest in companies that anything have higher over 5%, or you should be very, very cautious about investing or chasing these yields. Yes, we are in the middle of a pandemic, but you're saying that it was cut 33%. That's a little bit too high. Yes, a couple of my investment companies got cut, but not 33%. Not a third of my companies did not stop paying dividend. It's way less than that. So if your end goal here, we're at the bottom, if your end goal is to go back, is to be in dividend investing, why do you want to go to growth stocks? Why do you want to go to stocks and then come back to dividend growth eventually? I think that you are on the right track in terms of investing because you're putting in money. But if your end goal is dividend growth, I think that you should just stick with dividend growth. The problem here is what I see is that I think you have dividend companies, but not enough dividend growth. So we should look for companies that are growing month after month. So hopefully that helps. Just change your mindset, get rid of those high yielders and go with more conservative, solid companies that are growing, and just start investing in solid fundamental companies with a great balance sheet instead of unknown companies. Yes, it could be unknown companies, but if the companies are solid, go for it. Make sure they have a proven track record and make sure their projection is looking good. As always, guys, if you guys made it this far, make sure you guys like and subscribe the video. Please hit the like button. As always, thank you. See you guys next time.